Investing can be really complicated. We all go through certain questions like how to start, where to start, and should we even start or not. It's not about hard work alone. It has always been about hard work mixed with a hint of smart work. Welcome to Dollars and Bills, where we teach you about financial literacy. If investing is so important in life, then why does it seem so complicated? This is a natural question. Every new investor will ask at least once in life. Every new investor finds it hard to form a great portfolio. And that's where the divide begins. Here are some important tips which can change your life as an investor. Before we move on, make sure you press the like and subscribe button so that you stay updated with all the latest happenings in the world of finance. Let's jump right into it. Start with broad-based investments. One of the first questions a beginner investor finds himself asking is how he or she should start investing. A broad-based investment can be fruitful on multiple fronts. When you're investing in a broad-based index, you're investing in multiple stocks or perhaps a large group of stocks. Such investments can be healthy for people who are just looking to start, or they're looking for some sort of breathing space in the world of investing. These indexes are used to track the performance of a large group of stocks picked to represent the broader stock market. Now, it can be complicated as there are many stocks out there, but the best way to begin is to invest in the S&P 500. For those who've never heard of anything regarding stocks or investing, this should be the go-to target for everyone looking to start. These are 500 of the largest US companies to invest in. The plus points with the S&P 500 are that it does not have significant risk coming with it. Even though the returns are average, it is a perfect start point for investors. You can also proceed with buying a stock that is not volatile enough and can provide a stable enough. This is a simple and a secure way to start with investing. It doesn't matter if you're starting with $500 or $1 million. It is a great way of starting and is highly recommended by Warren Buffett. Simply ignore the press and the media. We all know that one of the main goals of media is to gain large viewership. So don't be surprised or don't take it too seriously if it comes out of the blue and comes with a headline about some absurd news about the market. Regular or seasoned investors are well familiar with such media, but it can be extremely unsettling for someone just looking to get into the game. A boom in young and overconfident investors has led to the rise of investment influencers on social media platforms, but following their advice blindly is not a solid strategy. When the headlines are scaring people about the potential decline of the stock market, try to focus on the long-term picture. If you're struck with a loss, it might be possible that the stock which cost you your vital investment will boom in the coming years. You need to know about the time horizon, risks, costs, and taxes before proceeding on to make a big decision. These factors can be decisive in your investing journey. Instead of trusting blindly on the news, take a look at the history and you'll see that the stock market has always recovered from potential losses. Sometimes it can be a roller coaster with many ups and downs. It goes without saying that you won't be injured if you don't jump off. Trust your investing strategy at all times. Research shows that those who are emotional are highly unlikely to be successful in the stock market than those who know how to control their emotions. To put the long story short, don't rely on news for making key decisions. Before we move on, make sure to press the like and subscribe to connect yourself with the world of financial literacy and investing. Your savings percentage matters a lot. It is understood the beginning investors can be discouraged with a temporary recession in the market. This can greatly demoralize them and put them off from future critical junctures where they would have made huge profits. Saving can go a long way in helping you stabilize your investing journey. All you need to do is to focus on what you can control and let the dice roll. The trend tells us that for long-term investing profits, you need to trust the market and trust your savings. Those who save more go further than those who simply fail to save more. Your ability to save can determine the fortune of your investing journey. For example, let's just say that you invested in some stocks and now that particular stock is paying you back in the form of dividends at 6 to 7% annually. Instead of just spending them on temporary leisures, try creating an emergency fund where you can save this money. Use this money to stabilize your career when the market is going towards recession. Try to invest in dividend-paying stocks. Let's just say that you invested in a stock that has a dividend-paying policy. A dividend is simply your share of the company's profits. When companies make profits, they give a chunk of the pizza to the investors who made this profit possible. There are many benefits to investing in companies that pay dividends, especially if you plan to invest in them for the long term. In addition to providing consistent income, many dividend-paying stocks are in defensive sectors that can weather economic downturns with reduced volatility. Dividend-paying companies also have substantial amounts of cash and therefore are usually strong companies with good prospects for long-term performance. It goes without saying that investors love dividends as it helps them stabilize their courses. For beginners, it is a great way to invest and to earn with time. One of the key ideas with stable dividends is the idea of reinvesting. For example, if you've invested in some 6 to 7 stocks who are in return paying you dividends at a stable 7% annually, instead of simply spending that money, try reinvesting that money in the stocks. You'll notice that by the time you're busy diversifying your portfolio, your shares will simply go up. Dividend-paying stocks allow investors to profit in 2 ways. First, through appreciation in the price of the stock, and secondly, through distributions made by the company. Most companies pay dividends on a quarterly basis. Investors who are nearing retirement or are already retired may gravitate towards dividend stocks as a source of income. Research shows us that those investors which invested in dividend-paying stocks are more likely to earn big profits and grow financially than those who did not. Let compound interest do the dirty work. No wonder it is one of the biggest wonders of the 21st century. Understanding compound interest and its working dynamics is the key point for success in the market. To put it simply, your cash will grow over time. Simple as that. Interested yet? Let's just say that you invested $1,000 in a company, and we're going to come back every year to simply add to that amount. Now, if you want to achieve a $5,000 dividend per month, you'll have to invest, let's just say, $700 if you're achieving a stable 6% annually. However, if you stretch that and make it a 20-year goal, then you'll have to save $417 per month at a 6% annual return and $820 per month at a 4% annual return. But then if you're making it your retirement goal, this means you are playing long. Then it gets simpler. Assume you are retiring in 30 years, then at 6% returns per year, you will only have to save $183 per month. And at 4% per year, you'll have to save $425 per month. The main reason this process keeps getting easier and easier for us is that we're just stretching it out over a longer period. The longer we're working on it, the more the compound effect starts to work on it. It simply gets better with time. Compound interest occurs when interest gets added to the principal amount invested or borrowed, and then the interest rate applies to the new principal. It's essentially interest on interest, which over time leads to exponential growth. Understanding compound interest is pertinent to making big booming profits in the stock market. No doubt that Albert Einstein termed it as one of the wonders of the 21st century. That was all for today. What do you think about these tips? How can you put them to use? Leave a comment below in the comment section and let us know about your investing plans. Make sure you press the like and subscribe button. Your support means a lot to us and it helps us grow.